Hello, my name's Charles Lastic. I am the Managing Director of Blue Bond Tax Planning. I've been helping hundreds of clients save millions of pounds on their inheritance tax over the last 18 years. And today's video is around what are the tax implications of transferring property assets into a trust. Okay, so today's video is around what are the tax implications of transferring property assets into a trust. So what are your reasons for putting the property into trust in the first place? So you should only consider putting assets into a trust if you are prepared to never want the income stream or the capital gains from it again. So I'll be clear, if you put a property into a trust and you want it to work for inheritance tax purposes, which is generally the point, you cannot get any of the income stream or the capital. In fact, it's an outright gift and you can never get any of that back. So if all you want to do is to pass it on to your children or whoever, that's absolutely fine as you don't want any income. But if you want to retain control over the property's income or the right to sell it, you shouldn't put it into a trust. So what happens if you then say, right, I am prepared to lose the income entirely, but what's the taxation issues? So if you put a property into a trust, the income on that property, rental income, is taxed as the income of the trust, and it's currently at 45%. However, if you then pass that income out to the beneficiaries, say your adult children, so it mustn't be non-adult children, right? Otherwise you'll get caught by something called the parental settlement rules. So if you pass it out to adult children or anybody else, the beneficiaries can take the income out and then offset that higher rate of tax. So if they're a 20% taxpayer, they can offset that extra 25% that's been applied. So that's how it works. So it's as if the tax arose on the income on that particular person. So in terms of capital gains tax, the trust has its own allowance for capital gains tax, which is different from a person. So for a trust, the tax allowance is £6,000 a year, so less than a person, which at the moment is £12,300. And the rate of tax applied is the same as a person, which is 20% or 28%. Now, if you've set up more than one trust on any given day, which we would frankly suggest that you don't do, you should set one up on Monday, one up on Tuesday, then effectively both trusts would get their full allowance of £6,000. So inevitably, taxation of trust is quite complicated. Make sure you get advice. You would make mistakes if you're a lay person and not used to dealing with this kind of stuff. There are tax implications, same as any other types of assets or same as any other legal entity like a company or a partnership. So make sure you understand the tax issues. Just don't rely on something as straightforward as this video. Okay, hopefully you found that useful anyway. If you did, give us a thumbs up and a like. That would be appreciated. However, thanks for listening and goodbye for now. Bye.